Assalamualaikum warahmatullahi wabarakatuh. My name is Hasha Amali binti Hasbua. I'm from class BA24958. Okay, so today I will present about functions of money market and differences between Islamic and conventional money market. Okay, functions of money market. First and foremost is liquidity management. Investors access funds quickly and securely. The money market is crucial for the financial system's liquidity, enabling governments, businesses, and institutions to efficiently acquire short-term funds, maintaining financial stability, and facilitating the flow of excess funds. For example, an individual invests 5,000 in a money market mutual fund. Later, they face on unexpected medical expense and need 3,000 urgently. They redeem their fund shares, quickly accessing the needed funds due to the high liquidity of the investment. Second, short-term borrowing. Institutions meet short-term funding needs. The money market facilitates short-term lending and borrowing, enabling businesses and governments to manage working capital effectively. It helps manage daily operating costs, payroll, and inventory, while lenders gain returns and maintain liquidity. For example, imagine a startup needing 500,000 for a new product launch. They borrow from a bank with a promise to repay the amount plus interest in 6 months. Conversely, the bank lends some excess funds to the startup, earning interest on the loan. Number three, central bank operations. The money market is crucial for central bank's monetary policy execution, impacting money supply, interest rate, economic growth, currency stability, and inflation rates. It serves as a transmission mechanism, allowing monetary policy choice to affect the financial system. For example, a central bank reduced the money supply to control rising inflation. It sells treasury securities to commercial banks in exchange for cash. This reduced the available funds in the market, leading to increased interest rates and decreased spending. Number four, investing opportunities and risk management tools. The money market offers low risk investments like treasury bills, commercial papers, and certificate of deposit, making it a crucial part of diversified portfolios and liquidity management strategies, providing investors with income while protecting their wealth. And last but not least is price discovery. The money market identifies short-term financial product price through supply, demand, and risk negotiation, providing accurate information on borrowing rates and investment returns, promoting market stability. For example, suppose the government issued treasury bills with different face values. The market price of these bills during their sale reveal prevailing interest rates. Higher price indicate lower rates, reflecting economic conditions and investor expectations. Next is differences between Islamic and conventional money market. Okay, what is Islamic money market? Islamic money market adhere to Sharia, a law prohibiting interest and encouraging moral financial behavior. They use profit sharing, leasing, trade principles for financial instruments like Islamic bonds, ijara, murabaha, and mudarabah. These instruments fulfill liquidity functions while adhering to Islamic finance moral and legal requirements. Islamic money markets are crucial for Islamic banks to manage excess cash and short-term liquidity. Okay, next is what is conventional money market. Conventional money markets are platforms for trading short-term debt securities such as treasury bills, certificate of deposits, and repurchase agreements, helping governments, businesses, and financial institutions manage their funding needs. Lenders receive fixed or variable interest rates, and transactions are based on interest payments. These markets are crucial for monetary policy and controlling banking system liquidity. Okay, next is differences between Islamic and conventional money market. Okay, as you can see in the table, okay, first and foremost is core principles, interest and profit and risk sharing. Okay, for Islamic money market is based on profit and loss sharing, trade and lease, and riba is prohibited. And for conventional money market is based on interest-based lending, which lenders earn fixed returns. Okay, second, financial instruments. For Islamic money market, use Sharia compliant like suku, murabaha, and wakalah. And for conventional money market, it use interest-based instruments like treasury bills, commercial paper, and repos. And the third is risk distribution. For Islamic money market, it is emphasized risk sharing contracts like mudarabah and musharaka. And for conventional money market, risk is transferred to the borrower lenders can earn regardless of outcomes. Okay, so number four is Sharia oversight. For Islamic money market is subject to Sharia board review and ethical compliance. And in conventional money market, is governed by secular laws and financial regulations and no religious outside oversight. Okay, number five is collateral and guarantee. For Islamic money market, is collateral is allowed but must not be tied to interest-based loans. In contrast, collateral secures interest-bearing loans. Guarantee may earn interest. And last but not least is liquidity management. In Islamic money market, we use suku al-icharo, commodity murabahah, and wakalah placements. And for conventional money market, relies on interbank lending, repos, and other interest-based tools. And lastly is regulatory. For Islamic money market, it requires both financial and Sharia governance, but in conventional money market is regulated by central banks and financial institutions, financial authorities without religious input. So that's all from me. Thank you and assalamu alaikum.